Hi everyone. Today is November the 7th and my name is Anne-Marie Band. This is the Moneyball Morning Report for the Benzinga Pro platform. Hopping in, taking a look at the ES. Look at the motion. This is a very unusual pattern. We don't see it often. Right? This kind of move right here. It's a very unique pattern. Now, what's going to happen? I don't know. We've got negative divergence, but that doesn't matter. Only price matters here. So where's next? I think some folks are going to try and hit 6,000. I think that's what they want to do. That's what they want to do. And so the question might be, if it's a buy the dip day, where is the line in the sand? And you could see the breakaway here at 59.54. I drew this for us yesterday, right? And that didn't break until evening hours. And then it came back, tested it, and now we've got ourselves another potential breakaway area. Where is that? My suspicion it's 59.66, 59.67. Okay? If you like looking at Bollinger Bands, and I've got a volatility band here, which is essentially a Bollinger Band. This volatility band here is, we're making higher highs right in the middle of the band. And so that normally tells us that we've got a little bit of a disconnect in location, but that also happened yesterday. And you can see how long it made higher highs in the middle of the band. It did it all day. So it's not telling us, hey, this is going to break down, but it is in an unusual space, and so we're going to look at the moving averages to give us a drift. Fades going to be into support, so you could take a short. You just got to be quick, or you're going to be dead. It's Fed day today, and so everybody's expecting a 25 basis point cut. It's about what they say around it. All right, so levels to watch, pullbacks, 59.54, that'd be like the sweet spot zone. I see our midnight candlestick formations somewhere around 59.62-ish. And our upward pressure events, if you want to draw yourself a little Fibonacci, just don't use it and go, okay, this is where the top is, I have to short. Trend is your friend here. So if you have, let's say you have two contracts and you buy them off of the rail, then into the first target, you could take one, and then the next fade into the higher low, you could add another one back. And as this one rises, you take one off, and then on the fade, you add one back, okay? And we should have a little bit of rotation here. If it moves continually upward, we've got 59.82, 59.92, and then 59.96. They are going to try and get to 6,000. This is my thought. All right, NQs. Same sort of thing. It looks a little bit more normal. Doesn't look quite like the ES does. Well above value area ranges. So I mean, a lot of times that means we pull back into that zone, so you want to be careful about that. The 1800-hour candlestick low is 20,870-ish. That's what we might look for. 870 is a big number to hold. And then the brand new line in the sand, little sloppy, but looks to be around the London Open, which is 20,933. Okay? That's what we're staring down. 20,933. What, per happenstance, might we see on the top end? Now notice the volatility band here is very tight. Okay, so tight usually gives us some range expansion. Trend is up. Mixed momentum, so the range could easily expand into these higher bars. That was me yawning, folks. Holy cow. I hope that I am not boring myself here. But, top of the band, 21,092. I don't like using that. A lot of times people use that, and I don't like using that one. Instead, we'll use a Fibonacci. We have to take a low to high or high to low. This gives us 21,080. Interesting. Matches fairly closely to the volatility bands. All right, and then 20,202. Anne-Marie, what if it fades? Listen, if it loses the VWAP, we've got some things to think about, okay? And so the question is going to be, if I lose the VWAP, is it still a buy the dip? The answer is yes. It's a buy the dip until 870. But you could potentially short it if you are sitting in very tight time frames. Let's get to the YM. This one, what a beast, right? Broke right out and over the 1.618 yesterday. Just kept running. 2 is all the way up here. 1.786 is probably sitting nearby at around this particular zone, 44,297. But 44,000 starting to look a little bit like resistance. So here's the thing, Anne-Marie, what are we looking at? We're under the slowest hull, but the moving averages are still flat and still generally upward. So fades into heavy congestion will make for the first buy zone. So heavy congestion is here at 43,781. That'll be the first buy zone, I think, will be nice. Could you short this? Absolutely. What's your risk? The high. All right, so what do you want to wait for? You want to wait for the break of the Globex high candle, which is 43,958. We're just above it. Let it break and then bounce and not hit higher. That's going to be your short action, and it'll take you into the heavy congestion here. It's also a low volume node, so watch out for that. The market's gotten way ahead of itself, folks. Look at this thin volume pocket. That is a vacuum that is begging to suck things up. Absolutely. Okay? So there we have it, sitting right in that range. Is it a buy the dip? Yes. The dip could be lower. Listen, we could give up 500 points. Easy. Easy. Give up 500 points. Your thought is, can I look at the trending motion of my moving averages? And when I see lower highs and lower lows, can I participate while holding myself accountable to a defined risk? And that answer is, of course you can. You just need to frame it out that way. Okay? All right. I stared down oil, traded it quite a bit yesterday. We do have the roll coming, but yesterday I said, listen, we got to head down to 71. And indeed, we did. We not only did we go to 71, we broke 71. Look at this London bar from yesterday. That is going to be, oh, for goodness sakes, that's going to be what we're staring down. If we hold this as a floor, we're going to head right back up to this area here and break down. This area here being 72.49. That's a good zone, right? Watch it here. Pullbacks look like buy zones in this area. 71 was my target. 71.17, actually, 71.16. And, you know, that's where we're at. Okay? All right. Now, let's look at gold. Everybody freaking out about gold falling down, but look at how nice our numbers held. 26.47. Sitting around there, look at this rounded bottom, right? Everything moving up. Could it be a little cup and handle? You know, I like the cup and handle. What it says is, here's my range. At 26.77, I'm breaking out. Can I pull back and hold a higher low? That really is what a cup and handle is, okay? That's all it is, cup and handle. That's absolutely all it is. Okay, so where could we be headed? Liquidity, which is right up here at 27.08. All right, if the dollar fades, Gold is pretty likely to bounce, and so pullbacks look like buy zones to me at this juncture. All right? They do. Just if you're interested, let it come back into heavy congestion and then move in the direction of trend. This is very steep right now, so it could be telling us that it's going to take a little bit of a breath. All right, let's take a look at SPY. Same sort of formation, pretty messy, but inside of the value area. Kind of shocking. If we're inside the value area, we're likely to retrace through part of that value area. Where's the breakout zone? 592. Yep. And then, wow. Let's draw Fibonacci. $598, $595. Entirely likely, but the market's really slowed down just a wee bit, okay? The market slowed down, and because of that, we have to be a little cautious in terms of just thinking, hey, listen, I'm buying and closing my eyes. Dips are buy zones. First line of liquidity is down here near the low volume node. Ton of movement up here, and then look at this monster gap that never filled. The low of the gap is where I drew the Fibonacci at 582. That should be a pretty nice zone for upside pressure. Okay, taking a look at the Qs. Today I'll be on Fast Markets with Top Step TV on YouTube. Would love to see you. I might very well be trading oil today. It depends. We'll see how it looks. It might give us some pretty nice motion. All right, so what have we got here? Outside the value area, it's moved quite a heap. Pullbacks are buy zones. Low volume node is where I suspect, but liquidity is not here until 502. Take a look. This was yesterday's formation. I said, hey, listen, if we get up over this 502 zone, it's going to run. Notice it gets up over 502, pulls back. How do you know if it gets up over a line and pulls back that you need to buy it? If the VWAP holds, if you've got higher lows, if you've got momentum sitting up here, all those things should say, don't worry, I'm making a higher low overall. That's my breakout zone. If it hits the breakout zone and pulls back to a higher low, I've got myself a shot going long. All right? Okay, folks, take care. I'll see you soon.